The broadcast is now starting. All attendees are in listen-only mode.
Hi, good afternoon. I'm Kathleen Taylor with the Nevada Women's Business Center, and I am so happy to continue with our webinar series with the Small Business Administration. Yesterday, we covered an overview of the SBA and its services and how it really is a vital resource for small business development. And today, we're going to continue with part two. And again, we have Ms. Christina Stace from the SBA. Hello. Good to see you again. Thank you. Thank you.
Thank you.
So we're going to talk about funding today, and that's an important topic, especially if you are a startup or an established business and you're looking for funding options. So the SBA has an incredible amount of options that people can explore.
Yeah.
So with that being said, I will hand it over to you, Tina.
Okay. Thank you so much, Kathleen.
Sure.
And I'm so happy to be back for part two of our three-part series.
Yes.
Anyway, so today we're going to talk about financing. I think probably the big high-interest topic.
Yes.
We talked about all our programs and services that we provide yesterday, and the topics that we're going to go over today are possible sources for funding, what lenders look for in loan applications, the 5 C's of credit, what is a credit score and why it matters, what's included in a loan application, the importance of having a good, solid business plan, cash flow projections, and assumptions that lenders make. And how to avoid some predatory lending that's out there.
That's really important.
So, when you get money to start a business, you might want to think about money that you've saved. This is important. It's hard to save money, but if you're going to start a business, you got to have a plan. So saving money, maybe you have an investor or somebody that can share, be a silent partner. Sometimes
Sure.
you can have somebody that's willing to put money into your business and is not running the business as you would. Money given to you or lended by family or friends is another option. Credit cards, home line equity lines, credit cards, and money from that source. Or money that you get from a business loan. So that's probably the highest interest in that. So we'll talk about microloans. We'll talk about state and other lending programs, business loans from banks or other lending institutions that are supported by SBA. What do you have to do to get a yes approval on your business loan application? I would think the biggest thing that would you take away for today would be do your homework, do your research,
Yes.
and figure it out step by step, because you want to go prepared to a lender. You don't want them to. You want to have an answer to every question that they ask you.
I agree. You do.
Yeah, so you don't want to, have. So you don't want to put any doubt in their mind. Because the minute you put doubt in their mind, that's going to be a no. So, the first step for a business is to make sure you have a business checking account. Talk to the bank officers about your business. Build that relationship.
Yeah.
Maybe do some research first on the other end. Like if down the road you're looking for a business loan, you might want to make sure maybe they're an SBA lender. Do they want to invest in companies like whatever your product is? Sometimes some banks are restaurant shy, for example.
Yeah, they are. Some of them are.
And so you want to make sure that the bank's going to be on your side. So that's building the relationships. So ask about the loans that they offer. Remember, not just SBA loan products, but there's other loan products that the banks might offer that might work better for you.
That's right.
Every situation is different, and the only person that can represent that is you, because you are the one that knows the ins and outs of your business better than anybody. So people make jokes about lenders. They're being cold-hearted bankers, but really, truthfully, they want to make loans and they want to be your advocate. They want to be
They
on your
do.
side.
Yeah.
They want to shake hands with you and both of you make money. That's their,
Right. Yeah.
they are a for-profit business. So most bankers also must answer to the owners of the bank. So like I said, they are for profit and they do have regulations and within their own structures to and certain criteria they have to meet. They have to balance the risk and the profit that they make. So think about that. So we have non-traditional lenders that are out there. SBA does have credit union lenders in our lender partner for portfolio.
Yes.
We have micro lenders in our portfolio.
Mm-hmm.
There's community-based lending programs, different cities, different communities, community advantage lenders, online lending platforms, and here in Nevada we have microloan lenders, Acción, Nevada Business Opportunity Fund,
Yes.
and that's wrong. That last one is not here in Nevada, so disregard that last line there. I meant to take that out.
Well, it's okay, but it's good to have those
Well,
types of
other states have that
alternative.
option. So anyway, a microloan is typically offered for smaller startup capital projects. So
Right.
Usually for less than 50,000. They can have a little bit more flexibility in their credit requirements. They pay more attention to the credit, to the character of the business
I agree.
owners. So credit is not as important as a more traditional lender might look at it.
Right.
They work more closely with the borrowers. They can provide technical assistance and advice to borrowers. And again, going back to relationship building.
Yes,
So that's
what it's
something
about.
that is a component of a microloan. They understand the conditions in the local community and they understand how it affects business operations. And so that's an advantage for a microloan, especially if you are a startup. Maximum loan size is usually, like I said, 50,000 is about the top of the range there. 13,000 is small for a business loan.
Yeah.
But it might be enough to set up
Right.
an office or set up a store or whatever the small business is trying to accomplish. It could be used for working capital, inventory, supplies, equipment, furniture, etc., but not for real estate or to repay existing loans. So you can't refinance with the microloan. Loan requirements vary from lender to lender. Micro lenders also provide help to borrowers with basic and any problems that come up after the loan is made. Again, you can build a relationship with them.
Right.
The Nevada Business Opportunity Fund,
Yes.
our Women's Business Center here, fantastic resource. So if you get a loan through them, you have them. They have you support. They provide you with the support that you might need, and a lot of training, different classes and things that you offer.
Yes, we provide those as well.
So the nonprofit microlenders, as I said before, are Acción and Nevada Business Opportunity Fund. $300 up to $1 million with the Nevada Business Opportunity Fund. So there's a big range there.
Yes.
Interest rates vary depending on the loan product, as anything. So 8% to 18%, and they'll say yes to startups, and they'll say yes if you have credit challenges. Every case is different.
Yeah, every case is different,
and every case is evaluated on its own merit. So, generalizations can't. So what matters most to a lender? You got to know the business. You have to have the ability to run it well and you work hard, make it a success. A business that is financially sound or is brand new and it has it, and it appears to have the ability to make enough money to pay back its bills and give its owners an income and pay back the loan that they're going to extend to you. So they want to maybe have some collateral to cover at least part of their lending risk. It's an investment from the business owner. So I doubt there's anybody out there that's going to give you a loan when you don't put something of your own funds into the business.
Yeah.
So you have to be vested.
You do.
And that is the proof in the pudding.
Yes, proof in the pudding. That's it.
Right? So, okay, so lenders are looking for applicants that address the five C's of credit.
Mm-hmm.
So we'll talk a little bit about the 5 C's of credit. Their character, capacity, your cash flow, collateral, guarantees. They might ask for an owner to give a personal guarantee.
Right.
Capital, how much money is the business making, and what's the contribution and the condition of the business. So character, your personal reputation and general impression that you're making on the lender.
Yes.
Your integrity, especially important to the non-traditional lenders. And going back to the microloan lenders, I kind of mentioned that that's something that they look at maybe a little bit more heavily than just on the credit score.
Right.
Who are you? What have you lived in that neighborhood for a long time? Do you give back to the community? Do you have an account with them? Are you just walking off the street and not? That's why it's so important to build those relationships.
Yes, it is.
Yeah. So how do you pay your bills? And really, really important. Bad credit usually means a loan will be turned down, but not necessarily. I mean, if you can explain what's happened. I mean, life happens.
Yes, it does.
People get medical bills
and
get a little bit behind on that.
Mm-hmm.
But if you can explain and say, hey, this is what's going on, or give some breakdown of to why what's happened, that can understand it a little bit more. Your references, the people that you ask to vouch for you.
Yes.
Somebody that's done business or known you for a long time, former bosses, anyone that could speak to your honesty and good business practices. A little bit difficult for a startup, but
yeah, it is.
So somebody that former bosses and coworkers are good for that. Your experience in running a business, management experience, can maybe translate into something totally off the radar for you.
Yes,
I mean, so it's not unheard of, but you need to kind of show them that you have some experience or knowledge and experience in the business that you're starting. So, something to think about. You got to prove it. So, if you can show that you've been a manager and you have had experiences in managing, but now you want to open a flower shop and you were an accountant. Well, it can be a little tricky, but, there's some history. So we're going to look a little bit on credit standing. How do you find out how you will look to a lender? You can get copies of your credit histories, your credit scores. Mm-hmm. Annualcreditreport.com is just one of the many services that are out there. I know a lot of credit cards are now offering it as well as part of their services. Mm-hmm. You can ask the credit reporting agencies once a year to provide you with a copy of your report. Equifax, TransUnion, and Experian are the top credit reporting agencies. So something to do there. So your FICO is your credit score, and it's calculated from both good and bad information on your credit report, such as how much money you owe compared to how much money you make.
Yeah,
how much money you owe on personal and business loans, other credit factors such as paying your bills on time. If you've ever had judgments, bankruptcies, liens, anything like that. So they're looking at all that. So review the reports. Remember I said you can order a copy of it once a year. So take a look at it. If you find mistakes, Contact the creditor in writing to ask them to fix it. Contact the credit bureau in writing to find out how they can correct the wrong information.
Right.
They accept disputes online. Provide copies of letters to the lender that, if you're seeking a loan, tell them this is a mistake and I'm in the process of trying to get this corrected. And if the report is correct, but it's negative,
Mm-hmm.
try to work out something before applying for the loan. Make the credit payments on time. Talk to the creditor, ask if you can reduce the amount due. Make payments over time. Make some kind of workout agreement.
Yes.
If necessary, work with a nonprofit that can provide credit counseling. There are credit counselors available. You guys do any of that?
Yeah, actually we do. Leanna Jenkins, our center director, she has over 20 years of banking experience, and she also has very savvy with financial literacy, such as credit counseling. Absolutely.
Okay, great. Yeah. So the second C is capacity, whether your business makes enough money to pay all its bills, including the new loan. This is most important of the 5 C's because it measures whether you can pay back the loan.
Exactly.
And I don't know what happened to my slide. Whoops. How do I go back? The amount of money that you make or expect to make is your cash flow for your business. And cash flow, you got to have dedicated for the bills that are due, and then maybe a little bit something for emergencies that might come up. So it's an important thing to look at. So if you're an existing business, lender will look at how much money you've made in the past, historical cash flow. So it's shown in your business financial statements and tax returns, usually the last 2 years, plus current year to date. Financial statements is what they will want to see. If you're a new business, your lender will rely on your business plan, your projections, and the revenues that you project as well. So, and how much you will need to spend. So that should all be part of your projection in cash flow. Collateral is the third C. So something of value, tangible assets. That you will own or will buy with money from the loan. You can pledge those as secured to secure the loan. This may be less important to a non-traditional lender, but it is very important to traditional lenders. So, and many of them will ask for personal guarantees to the loan and a promise to repay the loan if the business fails. Remember, again, they're in business for profits, and they want to make sure that they're going to recoup the money that they're giving you. The fourth C is capital and contributions. Business capital equals business net worth. What is the business worth? The assets minus the liabilities. Okay. So it includes the money you have invested in your business. It shows your commitment to the business and what you have personal risk if the business should fail. A lender expects that you contribute something to the business, equity injection, we mentioned that before. In other words, have some skin in the game.
Yeah, that's it, some skin in the game.
It's really, really important. And would you guys even consider a loan without someone putting something in
Well, it kind of depends. If it's a micro loan, maybe not as much.
But something.
But something. If depending upon the circumstances, some lenders require more adequate cash flow. Some of them are more collateral heavy. So it kind of depends on the case by case basis.
Well, especially with the traditional lenders, lack of equity usually means loan will be turned down. So
it really is to their
heavy
advantage to have some skin in the game. Absolutely.
Oh, absolutely. So the fifth C is the condition. Loan conditions are what the lender considers when approving your loan, such as the loan amount, the interest rate, what are you going to use the loan for? To buy fixed assets like real estate or equipment, inventory, or for working capital, and how well people are doing in your community and how well your business industry is doing. So that is part of the research that you need to conduct.
Exactly. Yes.
Because you need to have that all contained in your business plan, which we're going to talk about in just a bit. So asking for the loan to start or grow your business can be intimidating, but you can help your chances for success by being well prepared, as I've already kind of talked about. Have a thought out and written plan for the steps that you will take to get started and to get through your first growth phase. Tell your story well. You got to be enthusiastic and excited about your business.
Yes.
That can go for a long way to help get your lender excited and build upon your dream and make them believe that you're going to succeed. And be honest. Present yourself honestly, and they don't want to hear the good things. They want to hear there's the good, the bad, and the ugly. Because they're, hopefully the bad and the ugly are minimal.
Yeah.
And they're something that you can negate. And because there are weaknesses in every business, and so you have to be honest and showcase everything and lay it out there and excite them to invest into your business. The loan will be an investment into your business. So preparing for the loan, I mentioned the business plan and your resume, big important items to include with the loan application. So the basic of did I go back? I think I went the wrong way.
Okay,
let's
see.
Okay. All right. So the basics of your loan requests are going to be how much money you need, what will you use it for, do you need help with working capital money to help pay your daily expenses, the rent, utilities, employee salaries, so forth. What type of loan are you seeking? Another important thing to kind of research and go over. Make sure that, a fixed amount of money, use a term loan, which has a specific period of time. Are you looking for a line of credit, which allows you to borrow money, pay it back, and reuse it as needed?
Yeah. Those are some options.
Yeah. Retail businesses rely heavily on lines of credit to purchase inventory. You repay the borrowed money when you sell the inventory, and then you borrow it back to buy more inventory. How will you pay that back? So you need to know how much you can afford each month.
Right.
So be realistic and on what your receivables will be and what your what your expenses are going to be. So and make sure you can afford that loan payment. How many years or months are you going to need that loan? Do you own anything of value? Do you have real estate as collateral that you can pledge to support your loan? And find out how much it is worth. Find out what your financial condition of your company is. Are you paying all your bills every month? Are you paying them on time?
Yes.
Do you ever write checks for more than you have in your checking account? So that can be tricky.
Checks and balances.
Yes. How much money does your business really need? Here at the SBA, we get a lot of questions about, loans and, and ask the person, well, how much is your business looking for? And they say, well, how much can I get? Well, that's really not the answer you don't want to give to your lender when they ask you that question. That you want to make sure that you've researched it out and you know exactly what you need, what your needs are. And SBA has a resource partners that can help you
Yes, they do.
prepare for that before you go to the lender. So you can go to the Women's Business Center,
Exactly.
sit down with them. You can sit down with SCORE, the Service
Yes.
Corps of Retired Executives, or you can sit down with the
Right.
SBDDC, the Small Business Development Center. They will help you figure out your needs, financial needs, and what it is exactly your business is looking for and needs. So these are hard questions and only you can answer them, but like I said, seek out the technical assistance. SBA has those providers. There's other resource providers in the community. You can check them out as well. If your business is just getting started, you might consider all the business needs that you need to get through that startup period.
Right.
So the cash, the loan request needs to be the cash needed minus the money that you will have to put into the business. So that would be your equity contribution or injection into your business. Let's look at the business plan. One of the most critical documents in the whole loan application
Right, it is.
will be your business plan.
Absolutely.
And realize that your business plan is something that beyond getting the loan, it is going to be a breathing document, living, breathing document.
Yes, always.
For the life of your business, because it will be revamped and revised numerous times through the life of your business. So you got to look at the all the details on how your business will operate. And that should be included in your business plan. Manage, organize, and sustain your business. Help identify your target markets. Who are you going to sell your product to? How are you going to ensure you have the capital that you need to continue to grow your business? Talk about how you're going to make the money for your business. Tell the story of your businesses to others, including potential lenders. So you want your story, again, it comes into play here. That's your business plan, your business story.
Right, it is. It does tell the story.
And we have business plan templates to help
Yes, you
with
do.
that. So SBA.gov tools has a business plan template available. If you go to SBA.gov and just type in business plan, there's also talks a lot about it as well. So sometimes you might not be at the right bank. So going back to what I said earlier,
yes, good point.
You have to make sure that the bank is the right bank for you. So build that relationship. Find out, are they charging too much for, some banks charge more than others.
Yes, they do.
Make sure they're financially sound. Look at their capital and find out what their lending caps are. Is it convenient for your business? Is it something that is easy and accessible? Down the road, your employees may need to go make deposits for you, and you got to make sure, if they're not down the street, maybe they're across town. That might be impacting.
Yes, it does. That's a possibility.
And do they offer all the services that your business will need? Try to find a bank that's personal to your business. So not every fit's going to be right.
It goes back to what you're saying.
And if you're going, I'm sorry. Go ahead.
No, go ahead. About the relationship.
Yes, important.
As you were saying, yes.
So, and if you're going to go global, you might want to find out if your bank has the capability to do that.
Yes.
Yes. Some banks are too small, and some, so you want to make sure that they can do international wire transfers and so forth. Important things to think about. Maybe not as a startup, but down the road, if there's something you're like our resource partners are listed phone numbers here.
Yes.
For our resource partners here in Nevada. Small Business Development Center, Women's Business Center, Southern and Northern Nevada SCORE, Veterans Business Opportunity Center, local Chamber of Commerce's, local colleges and universities, accountants and business consultants are all resources to help you with your business plan.
Absolutely.
And probably another one to be on here that I didn't put on here would be an attorney.
Yes.
I think
An attorney as well. I agree.
Yeah.
Yes.
So what will you need to bring? You need to bring in your balance sheet, your income sheet, statements, your filed tax returns, at least 2 years, projections and assumptions to grow your business. And that's vital, key portion for a startup, because you're going to need to do your research and make sure your projections and assumptions are in line with that industry and in your community, and how well that type of business does in certain areas. So maybe some businesses don't do so well in some areas.
Yeah, it just
important
depends.
to take a look at all that. So you can put it together on your own, but assistance is always helpful. And
yes, it is.
I think, go ahead and put it together on your own, and then take it to Women's Business Center or SCORE or SBA. Say, hey, this is my loan application that I wanted to take to such and such bank. Would you review it for me? Do you think I have all my components in there that I need? And then because you have to be able to explain whatever you have in your business plan to the lender.
Right.
So if you have somebody write it for you, that may not be the best solution, because you may not understand all that's what they put in there. So sitting down with one of the resource partners and looking at everything would be like a practice run, maybe.
It really would.
So
absolutely.
it would provide a lot of assistance there. Having good financial systems is critical to ensure that you always get everything in your regulatory and all your books are in line and all your taxes are paid on time. Accounting and bookkeeping software is available. A good accountant, a good bookkeeper. There are bookkeeping services, accounting services. You don't have to actually have somebody on staff if you're, that small. So, and historical data is important. It's critical. You need to show whether you're new or an existing business that your cash flow projections and assumptions are feasible and in line with
feasible.
reality.
Reality, that's the key.
So cash flow is your estimate of money coming in and money going out of your business, and they should be reflection on how they should include how the loan will impact your business, either through purchase or of additional assets or the expansion, or what other purpose that you're looking to get that loan for your business. Be reasonable. Don't include explanation. Don't include explanations that are reasonable. Don't assume anything.
Right. Don't assume anything. Right.
And be clear. Make it clear language and something that the creditor or the lender is going to understand. Reflect your industry data to assure that your projections make sense and can be verified by the lender. Because if they can't verify it, it's going to be a no.
Yes, it is.
So that's about regular lending. So we want to kind of put it out there to be cautious about unfair lending practices. Right. There are some predatory lenders out there.
Exactly.
And if you got to be careful, because they take advantage.
They do. And they really do of a
high interest rates and
ridiculous.
Fees.
Yes.
And watch out for like loan offers that you didn't ask for.
Yeah, that too. Yeah.
A lender who promises you an approval no matter what your credit or history or score would be, and if they rush you to sign the papers, not good sign. So be very careful and take a step back. If you really need that money, just be very, very cautious, because the repayment terms that don't seem fair or appropriate, including balloon payments,
you have
penalties,
to be careful of that.
and early repayment penalties and
Mhm.
things like that, where, it's not unheard of to have 48%
Oh, it's not.
interest
Yes.
rate.
It's ridiculous.
Crazy.
Yes,
So,
it is.
and don't sign anything if there's a blank page or blank spaces on the pages.
Right.
Be sure you read what you're signing.
That's a red flag for
That's
sure.
really bad.
Yes.
So, and if you have doubts, don't sign anything until you consult with a lawyer
Right.
or a trusted friend or somebody that fully understands the terms and conditions of what you're that loan is, what you're agreeing to.
Right.
On that
Exactly. Yeah. Got an expert opinion or another set of eyes.
Yeah. So be credit ready by being aware of the things that we've talked about, and think like a lender. If it was your money, how would you want that money handled? I mean,
Exactly. Yes.
you're going to,
Put yourself in their shoes.
Just because you think it's a great idea, that's not going to cut it.
Right.
Not going to cut it. A good preparation is key.
Mhm.
You need to answer any question that they throw at you.
Yes.
You have to know your business plan and your financial data.
Yes, you do.
Never rely on someone else to speak for you. And I think we kind of
excellent
talked about
advice.
that all right before.
Yes.
But, really know you. Nobody knows your business like you, and you need to sell it to the lender, and you need to prove it to the lender by having that on paper and a good business plan. So they want full disclosure. Address any situation the business is in that may appear to be a weakness before the lender raises it. That goes a long way, because if you have a blemish, I mean, life happens, and they understand. Like I said before, you need to explain it, put it in writing, let them know what it is that happened, and how you're moving forward. So your story is a good story, so tell it, and tell it with enthusiasm, and sell them on your business. So that's about it. Then you're set to really go out and apply for that loan.
Yes.
It's
a process.
It's a process. And we talked about the 5 C's and why they're important. Know your credit score and how you can get a copy of it, and know what to avoid when you're getting loan offers that are not something that you were looking for.
Right. Just out of the blue or something.
Yeah. So, I mean, there's a lot of stuff to think about. Take your time, do your homework, do your research, use SBA, call us, call our resource partners, go to sba.gov online. We have lots of information there on how to start a business, the lending information is there as well.
Yes.
So be prepared.
Yep. Preparation is the key.
It is the key.
And due diligence.
It is the key.
Absolutely.
So, we want them to say yes. They want to say yes, and they want to invest in your business, and they want you to be successful. Small businesses are successful. Everyone is successful. So, my contact information is there. If you have more questions, reach out to me or visit the website. Call Kathleen at the Women's Business Center.
And to your point, sometimes rejection is protection.
Correct.
Sometimes a no may be an opportunity for you to, okay, maybe I need to do a couple things here so I can put more collateral, or maybe have to take a step back and do some things to raise up my credit score so I can be more lender ready.
Patience is important, and readiness is important.
Right.
And if they tell you no today, that might not be a no, 3-4 months down the road.
Exactly.
Because no, at least find out why they said no.
Right.
And go back and readdress those issues.
Yes.
And see, and approach it again. So don't give up. Just keep trying.
Yeah, and it's part of the process.
Yeah.
So with that, let's check and see if we have any questions or comments from our audience that tuned in. Thank you for a very comprehensive and excellent presentation, Tina.
Oh, thank you. I kind of
about
ran through that
funding.
kind of quick.
Oh no, that's
I hope
okay.
it makes sense.
Oh yeah, we understand. Audience, if you happen to have any questions or comments, then please use the question box that is on your control panel on GoToWebinar. If you have any questions for Christina Stace in reference to what she presented to you, please do so. Don't be shy. And if you have some things to kind of like think about, you're not quite, sure about anything in particular, you can definitely contact the SBA for additional resources. And I must say the SBA's website, it's very, very comprehensive. It's an excellent resource for professional development if you're an entrepreneur and you want to start business.
And they just redid our website, so it's even a little bit more easier to navigate.
Mm-hmm.
It's a little bit more intuitive. Things are laid out a little bit easier to read, so it really, really is a very, very helpful tool. We are very proud of that.
Yes, as a matter of fact, I used the website when I was trying to enhance my skills to open my business 2 years ago. And I would say between the SBA's website and the Small Business Development Center that I went to in Torrance, California, if it were not for those two primary resources, I would have given up because it's so much. It's a lot you have to do.
There's a lot.
So you need that support system, and I'm so glad that we have that with the SBA.
And remember, all our resource partners provide training classes as well.
Yes.
So Women's Business Center, you guys have training classes. SCORE and the SBDC have on their calendar. Go to their websites and you can check out the events that they're hosting and classes they're hosting, and lots of information, lots of training. It's never ending.
Yeah, absolutely, and just access all of us, and that's what I tell clients. Sometimes they ask me, well, should I go to SBDC or SCORE or you guys? And I said, use all of us. Yeah. We're all on the SBA. We're all working together to be in your corner so you can succeed as an entrepreneur. So with that being said, I understand that it's in the afternoon and people are a little busy, so no one has any comments at this time. But if you do think about anything, then please contact Tina Stace at the Small Business Administration through her contact information. And I'm looking forward to having her back again tomorrow for part 3 of this overview of the SBA. And tomorrow you're going to review
contracting.
Oh, excellent, excellent. So if you're interested in contracting and government contracts, that'll be a really good webinar to attend to. Same place, same time at 2 p.m. So Tina, thank you so much once again.
Thank you, Kathleen.
Excellent presentation, very comprehensive. And thank you so much for tuning in to a webinar sponsored by the Nevada Women's Business Center. We are an SBA program and we're a nonprofit, federally funded organization. If you have any questions, please give us a call at area code 702-734-3555. Thank you, and until next time, take care. Bye.
Bye. All right, we went over a little bit.